Hi everybody, Boris House from BK Forex. Welcome to our Forex Day Technicals for 12/3/13. As always, trading foreign exchange on margin carries a high level risk, may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand a little associated trading on margin. To seek advice from an independent financial advisor if you have any doubts. So let's take a look at the charts here today. And let's start with the euro today, because I think what's interesting about the euro is the fact that we've had 1, 2, 3, really almost 4 days where we could not get past the 36.25 level, basically stalled out at that level. That's a pretty ominous development technically. Suggests that we could possibly test the 35s to the downside. Certainly, that looks to be like in the cards here within the next day or two, that the euro just simply ran out of gas. It's looking basically like it ran into that resistance that we saw earlier, the 36, and just could not push past through it, even though we had a very, very powerful recovery of about 300 points over here. Technically, of course, that makes sense, but also fundamentally it starts to make sense because as U.S. data continues to improve, the chances of a taper increase exponentially. And the more U.S. moves closer toward a tightening bias, the harder it becomes for Europe to remain at these very highly levitated levels, especially given the fact that, really, aside from Germany, you don't have any kind of a strong economic growth in the region, and that leaves the ECB essentially on a much more accommodative path than it really wants to be. So euro, I think, under threat here towards the 35 in the next 24 hours. Yen, on the other hand, had a big push on the positive US data, but just couldn't quite hold the 103s. Yet still, I think the 103s is very much in play. What's really, really in play is, of course, this 103.50, 103.60 level, because that's the yearly highs. And if the yen can penetrate the yearly highs, we really then have 105 as the next big move. The only cause of concern here is that we've had a pretty serious parabolic move here. We've basically had move without much consolidation straight up. That could be positive, but it could also suggest that we may be coming in here for a little bit of a consolidation. We may be even creating a sort of a double top at 103.60 before we push higher. So I'll be wary, but at the same time, I still think the bias looks to be to the upside in dollar yen. Cable had an interesting day today too, because on the face of it, it looked very strong. I mean, we had this very, very big, powerful move, good manufacturing data, the best I think in 19 months or something, just served a very strong order book. Bottom line, though, is all of this good news just could not hold, and we basically flamed out above the 64s. So if there's a pro-dollar move across the Asia and European session here, cable is definitely vulnerable to a little bit of a sell-off here towards the 63s as the next level of support. I don't think it's really much of a correction, but the 63 level definitely looks to be tested. If we can reverse this and flip out and actually take out the day's highs of 64.40, that would be a very, very bullish development, because it would suggest that this was a fake doji, fake shooting star basically on the charts. And when you have a shooting star completely reversed, that suggests further upside potential, maybe 65 at view. But for now, the operating top right now is 64.40, and that is what's really driving the trade against that top. So 63 is the next target of the shorts. 62.50, 62, of course, the much deeper support that the shorts are trying to see if they can press correction. And then the Aussie was also an interesting trade because ran up to this 91.50 earlier, again on I think initial optimism out of China, and then that came back down. And now, of course, we're facing a pretty serious event risk in Australia. We have retail sales coming up in a couple of hours, but more importantly, we have the RBA meeting. Not much is expected to really come out of the RBA meeting, but if they continue to beat up the pair, what you really have here is this very solid support at 90.50 that is very tempted to be tested, of course. And if they are relatively nonchalant, then you have a potential flip here of this shooting star that could then take us towards the test of the 92s. 92 is still also a very, very serious resistance level here. So just because it turns to 92 doesn't necessarily mean it's going to go higher. But still, I think Aussie at a critical juncture here. If it starts breaking this 90.50, it really puts itself back on a path towards a test of the 89s, which was the yearly lows of a couple months ago. Aussie definitely the key play and the key trade for at least the Asian session and perhaps even early European trade. But also watch the euro, especially the 35s, if you get any further pro-dollar movement as the day progresses. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg over now.